Should we buy or sell Zoom? First off, read this disclaimer carefully. Here is Zoom's website. Yeah, we accept some cookies. So one platform to connect, bring teams together, reimagine workspaces, engage new audiences, and delight your customers, all on the Zoom platform you know and love. So I have put Zoom under the theme virtual workplace. So they are in the video conferencing business, basically at the 52-week lows and 65% away from the 52-week highs. Zoom was massively in the news, super hot topic during the lockdown period. Then it did sort of fall a bit by the wayside. We do see that we are definitively at a very low level. This is double bottom, but also a potential level where if we were to lose this floor, it's super bad. Then we could easily just fly below the IPO price, and yeah, things would really be grim. But you could argue that there is a double bottom in play. We are seeing some initial reaction here from the bulls, very tepid, very careful. Here are some recent news. Oops, like that. So Zoom shares climb 4% in effort to claim late December gains. Okay, not a strong headline. You see that here were some recent earnings. 78% surprise, but we didn't see much of a rally. So there is a lot of room for improvement here. Looking at daily data points, some initial bullish action, but the big question is basically this double bottom. So here is the weekly data points. We are very low on RSI and the PPOs. MACD is seeing some constructive action, but price is still going down. Here on the daily data points, MACD buy signal could come if we get a few more days with a rally. Accumulation distribution is corroborating price action in the chart, but still a long way to go here for the bulls. But we do have a key event. So in my notes, I write a double bottom. I will give the bulls a 6 here on the technicals. But this bullish trade is completely contingent on this double bottom. If we were to lose this floor, then it's very hard to estimate how much further we go down. It's really bad to lose a double bottom after such a massive pullback. Let's have a bit of a look here at the seasonality. So we don't get that much data here from the seasonality forecaster. We have some data here from this indicator. Still some issues with this one, status error. So January closes higher 60% of the time. Looking at all of the data, that is, it's a bit bullish, but we have very little data to go on. So while the data we do have is bullish, we will give 1 point to the bulls. We simply don't have data to. That's like enough to actually trade on. So here we got the historical price book ratio, price to sales, and price earnings, and we can see that we are definitively historically speaking, very cheap. Also, at the most recent time frame here, going back to May of 2022, price book very low, and low price book is good in the sense that it's value here. Price to sales is also low. Price earnings is also it's a bit higher, but it's not high as such. So let's now look at the price targets among the analysts. So 27 analysts have a 1-year price target for Zoom video communications. Average target is 28% above us, highest is 62%, and the minimum price target is 1% below us. So I would say that these are some pretty good fundamentals. I think I will give the bulls an 8 here. This is very good. Yeah. Let's look at relative performance. So, looking at weekly data points, long term, we have 3% positive correlation with the S&P 500, 85% with ARK-K Innovation ETF, and 84% with the Work from Home ETF. Looking at daily data points, 38% with S&P 500, 77% with ARK-K, and 75% with Work from Home ETF. So the strongest correlation actually is with ARK-K, even though this ETF here, the BUB ticker, is more directly related. But yeah, let's look at ARK-K. Because what happens to ARK-K has a tendency to affect Zoom. At least it is very low. Going all the way back here to 2017, this ETF was much higher. The maximum upside from the current levels, let's measure it here, like that is over 400% upside. But obviously we do see a severe lack of bulls. There's vastly more sellers than buyers for ARK-K. Let's quickly have a bit of a look here at the seasonality. Yeah, it's a bit bad actually into later January. Yeah, January is very 50-50 according to this tool. That is a bit of an issue. So, but let's look here at the direct comparison. So do it like this, and like this, ARK-K. So with weekly data points, we see that Zoom has underperformed ARK-K substantially. It's a bit messy at this point because RSI is approaching a territory where we have seen pullbacks in 2021 and also here in October and also in November of 2022. So yeah, it's a bit messy. But looking at daily RSI, we are not in like very high danger territory yet. If we were to get overbought on RSI, that is usually a bit of a omen that there could be some underperformance from Zoom on the horizon, but not necessarily now. Let's have a bit of a peek at the seasonality. We don't get much data here. There was some interesting data here on relative performance, so I do think the bulls deserve a 3 here. We end up with a 4.5 here in favor of the bulls, which is it's a strong score, but this is completely contingent on this double bottom actually holding. If we were to lose this floor, it would be just really, 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 really bad. So make or break for Zoom. So let's have a bit of a look at the top holdings in the ARK-K ETF. Number one is actually Zoom Communications. We have recently looked at Zoom, but the next on the list is Exact Sciences Corporation. So here are the weekly data points. The green 50-week moving average is a big deal, and it's a very, 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 very solid resistance level. Just yeah, the bears are really at it. Let's have a bit of a closer look here. Seasonality is pretty bad. Looking at the seasonality forecaster, January does close higher 60% of the time. Let's look at the price targets for Exact. 18 analysts have a 1-year price target. Average is 20% above us, lowest is 29% below, highest is 92% above. Interesting. And looking here at the fundamentals with these daily data points. So price book is pretty low, also price sales. Price earnings is actually a bit higher. So yeah, a bit of a mixed bag. The issue here is the clear resistance. Then again, we are finding some kind of support here around the purple 20-day moving average. and we have broken out above the 200 daily moving average. It's interesting, but not like a super extreme buy. So here is Tesla. So Tesla, it's seen a very substantial pullback, but this is a hammer. It's a bullish technical pattern. Looking at the dailies here, yeah, we did see some bearish action, but now there's been 3 strong days. Seasonality for Tesla is not that shabby. Tend to see some weakness here in later January, but then it's off to the races. Let's look here. January closes higher 45% of the time. Looking at the fundamentals, yeah, historically rather low levels here for Tesla. Let's have a bit of a peek at what the analysts are thinking. Let's close these additional like that, clean up a bit here. So let's go to the forecasts. There are 36 analysts with a 1-year price target. Wow. So the average price target is 116% above us. Minimum is minus 31% below. Highest is 265% above us. This is looking very interesting because we have a hammer. The last time we had a bit of a hammer for Tesla was here, and you did have another week of with a rally. Of course, 1 week, additional week of a rally is not a huge thing, but a rally is a rally. When we look a bit at, let's look at how oversold we are. We are at such a key level here on weekly RSI. Yeah, the previous time we tested it was back here in May, 20th of May. It was a very good time to buy. Here as well in February of 2016. Yeah, this is a very interesting level for Tesla. Here is Roku, also testing a very low level. This is not a short seller's dream. This is a chart that is very intimidating if you are a short seller. If this trade goes against you, it can go big time against you. It's up here where it makes sense to be a big bear, when the security is very overbought. Now it is, I'm pretty sure it's it's very depressed on RSI and the PPOs on the weeklies. And also the dailies. This is dangerous territory for bears. Not much action here on the seasonality tool. Let's look at the fundamentals. 26 analysts have a 1-year price target. Average price target is 46% above us. Minimum is 6.6% below. Highest is 121% above. Let's do this. And like this. Price book is really very low. Price sales is low, and also price earnings is, historically speaking, pretty low. So we have looked at Zoom. It is very depressed, very low level. We are testing a double bottom. This is not a favorable setup if you are a bear. However, if we were to lose this super key double bottom, then the downside could be substantial. It's very important to remember that many stocks go public, but all of those stocks that go public, very few remain public, for 10 years, 20 years, and so on and so forth. Many do see their shares being dumped. There simply are too many securities that are public and not enough money that can flow into them. So there's a bit of a winner takes all setup in the market. That is why you have many stocks that go down very substantially and completely disconnect from fundamentals, and then they will just be delisted because it doesn't make sense for the executives to use the public market to raise funds when the investors don't see value. So that is something to just be aware of. That's one of the dangers of fundamental analysis, is that you can be completely correct, so correct that the shares are taken private again, and then you will have other people benefiting from that, but you will have an exit at a low price. But yeah, I do think things this is at least a very interesting bullish opportunity for Zoom, and also we've seen some bullish opportunities in other securities as well.